Facebook, YouTube, TikTok as well. So really excited to be live on TikTok today. If you haven't checked out my TikTok channel, you'll see this broadcast on my TikTok channel for the first time today. It is at Canadian Mortgage Weekly, and that is on TikTok. So looking forward to talking about National Citizenship Week in Canada, as well as celebrating some of the mortgage programs that are available for folks that are new to Canada that don't have a very much established history in Canada yet. So I'll go through a little bit of how that all works out. Some programs as well that you can add on to these new to Canada mortgage programs, as well as being able to use additional first time homebuyer programs with that new to Canada mortgage program. So if you're joining us on TikTok, this is the first time we're going live for the Canadian Mortgage Weekly episode number 139. This is Canada's only weekly video mortgage news podcast. And today we're going into Citizenship Week, celebrating that. It runs from May 22nd until May 28th. And so what's Citizenship Week all about, and why am I going into these new Canada programs? Well, Citizenship Week is actually a chance to celebrate new citizens and all that it means to be Canadian, which is our diversity, our history, our culture. And with all that, part of our culture actually is right to housing. And where I come in is the purchase of housing. So I can help with the mortgage. And as for the right to housing, there was an article that came out, I believe it's Bill 97. It talks about the right to housing in Canada and how housing now is a right. Bill 97, C97, which contained the National Housing Strategy Act. So that's things for affordable housing, apartment units, rental housing, purpose built, as well as more mom and pop lenders, landlords, to be able to provide housing for residents as well. So new housing available to Canadians. I know right now we are in a housing shortage, which is really tough because anyone that wants to buy a property or get in a home, there's a lot more demand for that property. Rents seem to be going up and housing seems to be getting more expensive again. But anyway, that's Citizenship Week, is to be able to celebrate this part of our culture, which is the culture to have the right to housing. And some of the mortgage institutions in Canada, as well as mortgage insurers, have new to Canada programs, which I want to cover over with you all on a high level, just to give you an introduction to these programs. And if you're watching on TikTok, welcome on TikTok. I'm doing it live now for the first time on TikTok and Facebook, YouTube, everywhere else there. But yes, there's three main new to Canada programs that I want to cover today. And one of those ones is to be able to buy a home in Canada if you're new to Canada recently. And what does new Canada mean? New to Canada means that you recently got your permanent residency, your citizenship, or a work permit, right? So you're authorized to work in Canada. These down payment programs start with as little as 5% down. So if you have been in Canada less than 5 years and you recently got your work permit or your permanent residency, or your citizenship within that first 5 years, then you can actually get in with a 5% down payment. Some cases 10% down, and that all depends on your specific situation. But those are programs available to Canadians with really solid credit history, really solid employer history, and you have to have a lot of established time in Canada to be able to have access to those down payment programs. But this is accessible to new to Canada folks as well. Also, if you're new to Canada within the first 5 years as well, you won't have very much credit established in Canada yet, meaning you won't have a credit score really that robust that can be comparable to someone that's been in Canada for 30 years with a good credit score. So you may have very fresh credit history, very new credit history, might not be very much at all, may not be what the lenders typically look for, but during but while applying for a mortgage through the New to Canada program, you can actually get a mortgage specifically tailored to your citizenship, which is either a permanent resident or a work permit status. And in those cases, we can set you up with the limited credit score option where you don't need to have a fully documented credit history in Canada yet. You can actually provide alternative credit history. And what does that exactly entail? That entails things like bank statements from your institution back home, could mean credit history from your credit history provider in that country, your home country. Or it could even be a letter from your current landlord saying how many months on time payments you've had. Could even be a insurance company policy that you're making payments on. Credit history items like that can help a lender and myself underwrite your file to be able to submit it for this New to Canada program. Also, they have another requirement that allows you to buy a home with less employment history. So in Canada, typically, if you're new to the workforce, we would want you to have a co-signer with your mortgage. However, if you're new to Canada, you've just come to Canada, you've just come here from a different country, we allow you actually have less employment history, as little as 3 months. And 3 months is typically how long it takes for someone to get off probation and to be able to hold down a job permanently. And that's all that's really required for the New to Canada program. It allows you to land in Canada, get your permanent residency, buy your home with as little as 5% down with only 3 months employment. How amazing is that? Really fast access to housing if you're coming to be permanent resident in or work permit in Canada. All right, and some of the other programs that you can actually combine with this New to Canada program are some financial incentive programs, which I want to cover as well. Providing you are a first-time home buyer, you can also have access to the first-time home buyer incentive program, which later on this week I'll do a video about some of the restrictions to that, but it essentially gives you an additional down payment on your mortgage. I call it almost like a buy one, get one on your down payment, because if you're putting in 5%, you're going to get back 5% as a government investment into your property. So what does that mean? If you're putting in a 5% down payment on a $400,000 home, that means that is a $20,000 down payment. And what does that mean with the government's involvement? Well, if you're putting in a 5% down payment of $20,000 on the $400,000 house, the government will then put in an additional $20,000, and that will lower your mortgage amount from what could have been the $480,000 with your $20,000 down payment. My apologies, $380,000 with your $20,000 down payment to $360,000 with your $40,000 down payment. And with that, you'll actually be able to pay a lower monthly payment, a lower biweekly payment or weekly payment, whatever you choose to do that way, and be able to get it in with a lower payment per month or biweekly. There's also the first-time homebuyer tax credit. If you're a first-time homebuyer in Canada and you buy your home, then following year when you're doing your taxes, you can actually claim a tax credit on your income tax return. I believe it's line 36900. You want to check that out. There's also a RSP first-time homebuyers plan. You can contribute money into an RSP even with you being in Canada the first year. You contribute that money to an RSP, then you take it out 90 days later for your home purchase, and you have a tax refund as well that you can then bank on at the end of that year. You have the first time home savings account, which is a new account in Canada to help you build your down payment tax free as well. And there's also the provincial land transfer tax rebate, which is a rebate of up to $4,000 on the purchase of your own home. And when you're purchasing your own home in Ontario, you're going to have to pay land transfer tax to the province of Ontario, anywhere in Ontario. And if you're purchasing in Toronto, you're going to have to pay municipal land transfer tax to the city of Toronto. which there is another rebate there for first-time home buyers if you're buying in the city of Toronto of an additional $4,000, but you still have to pay 2 land transfer taxes if you're buying in the city of limits of Toronto and in Ontario. But anywhere else in Ontario, it's the one-time provincial land transfer tax, and there is a rebate for anyone that is new to Canada and also has their permanent residency. They can apply for this land transfer tax rebate. Mind you, for this one specifically, you cannot have owned a house or any land anywhere in the world before. So if you have even been having your name on a title on some lot in the past, even if it doesn't have a building on it, that still excludes you from the land transfer tax rebate. You want to actually talk to a lawyer just to double check all of that to see how that all works out specifically. And my last mortgage product that can be combined with these new to Canada mortgage products is actually a cashback mortgage. And a lot of people use a cashback mortgage if they need some extra expenses at closing to fund things like closing costs. The lawyer does cost some money, or they want some money to spend at the time when they move into the home. So this can give you a few $1,000s to say buy that flat screen or put a down payment on a hot tub. One of those many different things, right? So, or it gives you that vacation that you want to go on as well, right? It gives you some cash back money, even for moving costs, for example. There's a lot of moving costs out there. And May is National Moving Month, so make sure you contact me about your moving rebate that you can be eligible for with some lenders in the month of May. Anyway, so that is a little bit about the new to Canada mortgage program, as well as some of the first-time home buyer benefits that new to Canada folks can tack on at the same time as when they're getting their new to Canada mortgage. And some of the lesser requirements that are required to be able to get a mortgage when you're new to Canada. Now, also what I want to cover off is some of the mortgage stats that I've been seeing in Canada this week. And there's some concern to these stats because we have had, on the inflation side, inflation heading down in Canada since June of 2022. When I say that, we did hit a peak of inflation of 8.1% in June. And since then, we've had declines to 4.4% as of April. That's the most recent number. And 4.4% is actually an increase to the 4.3% number in March. So with that, I have some concerns about where rates are headed in a little in the near future. And before I get to that, let me cover off some of the main things here. And that is that the average national house price in Canada has gone up again. This will be another increase. Right now, we have an increase of 4% for the month of April. That brings the national average housing price in Canada to $716,083. So that's pretty amazing. What does that mean on the growth side? Well, we've seen now, it looks like houses did bottom out in January of this year. So that was the first month of the year at $612,204. And since then, we've seen an increase in February, March, and April. Before that, we did see small increases there in August and September. No, September we saw a decrease. So small increase in August and some big increases this month. This month, in the last 3 months, we've seen more increase in housing price since before the big dip. And that's really good news. For anyone that needs to sell right now, houses have been going back up. And we're now sitting at house prices same as we were in the middle of the pandemic. So like the middle of 2021. They did peak in the beginning of 2022. Not sure we're going to hit that again here. But with house prices having gone up now 3 months in a row, that is huge news for anyone buying a home. But there is also news out there with regards to the bond yield and the way it has been going up quite considerably. I've been following this over the last month quite closely and seeing the bond yield. What happened is it's gone up since May 3rd of this year when we saw a bond yield of 2.87%. 2.87% at the beginning of the month, and now it's almost the end of the month, only the 25th, and we're at 3.49%. So the difference to that is more than 50 basis points. We're looking at 60 basis point difference there. And what have I seen happen on the rate side? Well, as a mortgage broker, I immediately saw a lot of lenders start posting that there will be rate increases at midnight starting last week and into this week already. We're seeing a lot of lenders lift rates, which is going to probably put a slowdown into the housing market going into the summer, because a lot of folks right now are taking fixed rate mortgages simply because the variable rates are not really as competitively seen at the moment, because the rates are higher on the variable side. So not many folks want to take the risk of going variable. They'd rather lock in and go fixed. And when fixed rates start to rise, if those folks want to take a fixed rate, their affordability will start to drop very incrementally. So that could put a slowdown in the housing market. And with rates on the fixed side rising now, we could see that happening very shortly. 3-month interbank rate is the 5.04 is at 5.04% today. It's been staying steady here since January of 2023. And getting back to the inflation side, why am I worried a little bit about that? Well, if inflation is going up and national house prices are going up and the Canadian fixed market is pricing in higher rates on the fixed rate side, and I'm also seeing that the Canadian jobs market has been increasing as well, so much so that we had another 0.2% increase in April, tacking on from that's another increase adding on to March's 0.2% increase. So a lot of jobs added. That was 41,000 jobs in April. Quite a big jump. And with that, jobs market seems relatively strong. With those other influences there, the inflation heading up slowly, the prices of the homes going up quite considerably. 4 months last month. It's a month-over-month increase. We are seeing some concerns for the Bank of Canada to note on June 7th's meeting when they go to discuss interest rate policy going into the next season. And June 7th, that will happen at 10 a.m. We will do a live pre-rate show right here on Canadian Mortgage Weekly, Canada's only weekly mortgage video news podcast, to cover off the live announcement. I'll have my mascot, her name is Interest Rate, and we'll get her here to try to predict the interest rates correctly again. Maybe we'll do a little prize or something or giveaway with our mascot Interest Rate. But as far as that goes, we'll have that rate announcement right here on Canadian Mortgage Weekly Live at 10 a.m. on June 7th with a pre-rate show starting at 9:45 a.m. That's the same day, talking about some of the news and articles that we have been seeing going into the rate announcement to see if we can gauge a better idea as to where we are at with that rate announcement. But with the jobs market up and the housing market up and the inflation up, we have the Bank of Canada to be, we have to see that they will be concerned on June 7th. I think that my prediction is that they could definitely raise rates by 0.25%. And that wouldn't be great at all. However, they could do that as a safe measure just to make sure that they've got this inflation thing under control. Or if they don't, because it's such a minuscule increase, I admit it's very minuscule. If it was any more, I would be 100% on board a rate increase, but it's so small that they might even say, we want to wait until next announcement to see where the inflation numbers head from here, because it was such a small increase. And another reason why I think they might choose to wait as well for the increase, if they do decide to wait, but do mention it, is that a lot of data I'm seeing is that the increase inflation is due to increased interest rate financing costs, which if interest rates rise even further will contribute to the inflation that we're trying to beat, which is and being caused by additional interest rate costs. So you don't want that. You don't want to shoot yourself in the foot while you're trying to fix the problem. So I don't think the Bank of Canada is going to do that. I think they will consider that going into the June 7th rate announcement meeting, which is just happening in 2 weeks here. But they do need to make sure that they keep inflation in their back of their minds, with it being at 4.5% now for the month of April, which has, 4.4% for the month of April, going up from 4.3% in March. And yes, if you own a home right now, what a great time. Prices have been rising again. We had prices go from 612 in January to 662 in February to 686 in March, and now at 716,000 in April. So that represents an over $100,000 increase in house prices since January of this year. $100,000. Where else can you get that sort of growth on your funds? So anyway, getting back to what we're celebrating here today, National Citizenship Week. And what does that mean? That means to celebrate being Canadian, our heritage, our culture, our diversity. And one of the things I did today was I went into some of the benefits of being someone that is new to Canada, that is looking for home ownership. And one of the benefits is that you have lesser requirements on your employment history, lesser requirements in your credit history, and lesser requirements on down payment when it comes to buying a house in Canada. You just need to be able to kind of fit all the boxes, check mark all the boxes there, and we can do that. I've been doing these new to Canada mortgages now. This is my 13th year, and I can help you get set up with one of these kind of mortgages. You can combine them with other first-time home buyer programs, such as the cashback mortgage or the first-time incentive program mortgage, or the first-time home buyer tax credit, the RSP home buyers plan, the first-time home savings account, and the provincial land transfer tax rebate, and the municipal land transfer tax rebate that we discussed was simply just for the City of Toronto. So as you guys are watching also on YouTube and Facebook and LinkedIn, I wanted to go on and say this is also the first time we are streaming on TikTok, which is huge for us because we actually just hit 1,000 followers on TikTok. So thank you, TikTok, for all your likes and your followers. We really appreciate all your support while we're doing this on TikTok, and really getting our channel out there and our information out there. I know it's been not too long. We've been on TikTok now since about fall of last year. And in that amount of time, we almost have 200 videos now on our TikTok account, trying to release one every day with mortgage topics, specifically in May for National Moving Month. And specifically for this week, we'll be talking about moving and being new to Canada to celebrate National Citizenship Week. So just talking about some of our videos that are coming out this week. I'll be doing a Mortgage Weekly review on the weekend. We'll have a new to Canada mortgage programs list there on next week, as well as additional programs that can be combined to the new to Canada mortgage programs. I'll be talking and going into depth a little bit about some of the restrictions about the first-time homebuyer incentive. And also I'll be talking a little bit about, is it the law now to own a home in Canada? And I talked a little bit about that on my live today on TikTok and Facebook, YouTube, LinkedIn. And I went into a little bit about that in the article that came out. So we'll go into that specifically on that video. And if you ever have any questions about getting a mortgage and that you're new to Canada, please do reach out to me. I'm a mortgage broker working in Ontario. This is now my 13th year, and would love to talk to you about your mortgage, anything that you need to help get pre-approved. I know getting pre-approved is free, and a lot of people have concerns about what if I don't use it. It's really easy. If you don't use your pre-approval, you can reactivate it each time it gets to the end of the pre-approval, and it's just a pre-approval renewal. And you can just keep that open. It's free, it's no cost, and it gives you some peace of mind in case you are looking for a place that you can just put an offer on without thinking too much about it. You're pre-approved and you're ready to go. You don't really have to put that much thought into it because you've already done the legwork, and you can be excited in the process knowing that you're going to be able to afford that home, and that you'll be all set when you do get in and put in an offer. All right, so that's what we have here today. Those are some of the new to Canada mortgage programs, some of the programs that we can add on to the mortgage program, and some of the videos I'll be talking about this week. Don't forget, if you have any questions, contact me. My name is Joe Bladek, and we'll see you all next time on Canadian Mortgage Weekly Live, Canada's only weekly video mortgage news podcast.